All right. Hello, everyone, and welcome to the latest Mayday quarterly product updates webinar for Q3 2023. My name is David Tuck. I'm the co-founder and CEO here at Mayday. And here's Griff. Oh,
sorry. I'm Griff. I'm co-founder and CTO here at Mayday.
Amazing. Well, look, good morning, everyone. I'm really excited to be talking to you from LinkedIn Live. Our first time doing one of these, which is really exciting. And yeah, just a couple of kind of housekeeping points. So we'll have a section for a Q&A at the end, but please do fire questions through as they come to you. We may pick them up as we go, or we may pick them up at the end. And yeah, it's so exciting to be welcoming you back to another one of these quarterly product updates. Building in public is such a core part of what we do, and we love sharing with you our mission to mend month end and all of the work that we are doing and planning to do to bring about the benefits to you, reducing down to one click all of the pain of month end as you experience it today. So thank you to everyone who continues to join us on our journey and contribute in all of the abundant and wonderful ways that you have to shaping the product that we are delivering to you. So without further ado, we're just going to start with looking back at Q2 in review, and then we're going to come on to what the plan is for the third quarter. So Q2 has been amazing. We had Balancer launch a couple of months ago now, the third of our multi-entity focused products for zero users. So slotting in alongside Mayday Recharger for your intercompany charges where costs and revenues have hit the entity, hit the P&L of one entity in the group and need to be recharged to others. Bragg, bank reconciliation across the group where you've got bank transactions in one entity that relate to another and making it really easy for you to reconcile those off without switching zero files. And then Balancer completes the trinity. So Balancer is for making sure that never again will your loan accounts fall out of balance. And just so exciting because they're so, it's so easy for those loan accounts to fall out of balance due to posting asymmetries, due to FX adjustments, due to the need to charge interest. And I remember as when I was a CFO and financial controller, you could spend literally days pulling your hair out trying to unpick every transaction to find the culprit or culprits of why your loan accounts weren't in balance, and then putting Humpty Dumpty back together again so that the accounts could consolidate out. And now with Balancer, that's never again going to be an issue because we are constantly checking that your loan account's in balance, flagging to you any discrepancies, enabling you to one-click post the FX adjustments and one-click post the interest that needs to be applied to those loans. And it's been fantastic as a product to see the value that that's delivering. And then more broadly, the kind of greater than sum of the parts synergy that Griff and I have seen. If we think back to when Mayday Recharger went live, best part of 18 months ago now, and Recharger is a phenomenal product and the value it delivers. But the sort of greater than sum of the parts synergy we now have to be able to address all three of your multi-entity pain points with the complete suite that we have. And we saw that reflected in Graham Shapiro, who's the Zero MVP for South Africa, talks about how Mayday Balancer is so easy to use. If you operate with a group of companies and use Zero, you have to try Mayday. We have another review on the Zero App Store that talks about if multi-entity, then Mayday. It's just phenomenal the value we're delivering for multi-entity groups. So thrilled to have Mayday Balancer launch, completing the trinity, getting great feedback. When we published our Q2 roadmap 3 months ago, we had plans to get our revenue recognition automation product into beta. So this would be still relevant for multi-entity businesses, but also relevant for single entity businesses. I think what we realized as we went over Q2 was that there was a bunch of kind of pressing work that we wanted to make sure that we did and needed to make sure that we did on our multi-entity suite before we moved into revenue recognition. So that's absolutely still on our roadmap and a really exciting part of our plans. But we are focused, or we have been focused, and we continue to focus on those more pressing improvements we want to make to our multi-entity suite first. And then also within Q2, I talked about the great feedback we received. Like a couple of great highlights for us. We won Xero's Emerging App Partner of the Year award back in April, 3 months ago today, this very day actually. From their 1,200 plus ecosystem to be recognised, as the kind of the Emerging App Partner of the Year was such a thrill for us, and huge thanks to all of our customers for their support that's helped us progress, learn what we need, and deliver the product that's enabled us to win that award. And then last month to win the Generation CFO, Rising CFO Tech of the Year. So Generation CFO, a 70,000 plus community of finance leaders. Amazing to get the recognition from them. So it's been an incredible quarter. And then third kind of standout achievement was the big enhancement to Bragg with the create functionality. Griff, over to you.
Thanks. Yeah. So Dave mentioned Bragg, bank reconciliation across the group. So the idea there is you've got a payment or you've received some money in one entity, and that's due to a bill or an invoice in another entity in your group. That worked fantastically before if that invoice or bill already existed. But obviously Xero's bank rec screen has a create tab, and it allows you to create that within the entity at the same time as you run your reconciliation. So now Bragg has its own multiplayer version of that create tab. So within Xero's bank rec screen, you can create an invoice in another entity or bill in another entity and reconcile that off all within that screen without changing Xero files, without having to move around. So that's been really great. That's been a great enhancement to Bragg and really valuable for our customers. So let's segue there into what we're going to be doing in Q3, starting with Bragg. So the first thing will be around over and part payments. So at the moment, if you've got a payment in one entity, say, and that relates to a part payment of a bill in another entity, that's absolutely fine. But if that's multiple invoices, or indeed if there's an overpayment involved in that, it's difficult. We can't actually work that through Bragg at the moment. So what we'll let you do is specify exactly how that payment or received money should be split across those invoices, and also create overpayments if you need to, all within, again, that single screen. You don't have to go anywhere else. You can do everything within that single bank rec screen, and boom, everything's done. The other thing we're going to be doing is enabling you to reconcile both inter and intra entity. So if you've got a payment, let's say, and part of that relates to an invoice in that entity that made the payment, but part of it is an invoice in another group entity, at the moment, you would have to split that payment out and do that in 2 steps. What we'll allow you to do is kind of a hybrid, using Xero's bank rec for the intra entity. I'm going to get that wrong probably, the intra entity part of it, but then using Bragg to reconcile across to the invoice in the other entity as well. So you'll be able to use both those systems in tandem to reconcile that single payment across both within the entity and within other entities within your group. So that's going to be really exciting. We're going to move on to Recharger now. Recharger is a great tool for posting your intercompany recharges, but it only lets you do that after month end. So the month is closed, you've done your bookkeeping, you've done your other processing that needs to be done, and then you can go into Mayday and post your recharges. We've had a load of great feedback from customers who say they'd actually like to be doing this throughout the month. Perhaps they'd like to do this weekly or even daily, so they can get a snapshot of where everything is going to land at month end. So what we're going to do is we're going to make some adjustments to the product, which will let you run your recharges for the current month, wherever you are in the current month. And we'll use all the transactions that have gone into all of your entities at that point and all of the rules you've set up. And you can calculate your recharges. You can even post those into Xero. And you can come in the next day or the next week and just update that and keep that rolling throughout the month, so you can get that snapshot of where everything is. And once the month ends and you've got everything done, you can just close it off. So we're going to be making that update this quarter as well. And we think that'll be really valuable for the businesses that need that specific feature.
Yeah, amazing. I was speaking to a customer just earlier today who has this. So they they have a bunch of central costs that they will do as part of their month-end close the recharging of. And then they have some salary costs, which will be paid weekly. And so this is going to be great because right now they can use us really effectively for those month-end costs, and they will be able to expand the value that they can get by being able to do those during the month weekly recharges of the salary costs as well. So really, really excited to deliver within month recharges, more frequent than monthly recharges, to serve our users there. Then the second big enhancement for Recharger, and this is really exciting, this is taking advantage of having Balancer live and the ability that we have within that, particularly when it comes to posting FX adjustments. So when it comes to recharge, right now, you have the ability to post your recharges either as an invoice in one entity and a bill in another, or as journals to the relevant intercompany code. And like neither of those is perfect in terms of the outcome that you have, right? Because if you post as invoice and bill, if you immediately pay that invoice and bill, okay. But what we've commonly heard from people is, well, that invoice and bill will then sit within general accounts receivable and accounts payable with all of your third-party receivables and payables. And actually that then distorts things like kind of debtor days and payables, because you've got effectively two classes of receivables in there, your genuine third-party stuff and your intra-group stuff, and the waters kind of get muddied from that side of things. But the real benefit of having your invoice and bill there is, firstly, it's sort of best practice from a tax perspective, that and transfer pricing, that you've got separate entities that they are generating their recharges through invoice and bill. And then also if there's FX involved, that with multi-currency zero, the FX adjustments will get automatically calculated, the unrealized gains or losses on those invoices and bills. Whereas that wouldn't happen in journals. If you post as journals, you post in the base currency of said entity, and then any FX movement is not automatically picked up and is left for you to do manually. So now we've got the ability to, well, we're going to deliver the ability to do the best of both worlds. So post as invoice and bill, which is best practice from a tax perspective, and then immediately mark as paid to the relevant intercompany account. And where there is FX involved, that can now be automatically picked up with the one-click posting of your FX adjustments with Bragg. So you get the best of both worlds. You get posting as invoice and bill, but you don't then get that kind of complication of your accounts receivable and accounts payable that remains genuinely third-party items. So really, really excited to deliver this enhancement in how Recharger posts, and then in conjunction with the functionality that you've got in Balancer, the ability to get the best of both worlds. And then moving on in terms of the Balancer updates this quarter. So a feedback point that came out of early users post Balancer's release was that a bunch of people, you know, within their businesses would have multiple intercompany loan accounts between the same entities. And initially, Balancer has just had one loan account between each entity pair. And so we will release the ability to have multiple loan accounts per entity for that situation. And then the other thing that we've just released, actually, in conjunction with our new pricing plan, is the ability to access the core benefits of Balancer for free. That ability to spot posting asymmetries, that Balancer does an incredible job of matching transactions between your entities, and then highlighting to you where you've got one-sided postings so that you can go and resolve those to bring your loan accounts back into balance, so easily spotting any discrepancies. That is outright free. The FX posting and the interest postings are then paid features, but we're so excited about now how, you know, particularly entities at the start of their kind of multi-entity journey, you know, with more modest needs, can deliver that and experience that value of Balancer, and then grow into the more sophisticated Balancer use with FX and interest postings, as well as the use of Recharger and or Bragg as their multi-entity needs expand. And that links to our new pricing plan. So we talked about the Balancer free product on the left there. Another feedback point that we got after, so we've had our original pricing structure in place for the last 18 months. And one thing that was brought to our attention by users was that there'll be multi-entity groups, potentially a kind of a trust structure, maybe, property company structure, where they will have multiple entities, but very low volumes of recharger and or brag transactions that they need to use Mayday for. And so our existing pricing structure was not doing a great job of catering to those multi-entity businesses with modest needs. And so that's why we've introduced our light plan, whereby you get all of the features of Balancer, so the FX posting and the interest postings, and then it works out as 5 recharge or brag transactions, so or a mix of those as suits your business needs per entity in the group. So this is again a great way of us catering to the needs of earlier stage multi-entity businesses who are just building up the transaction volume, and also those sort of trust structure property companies where there are multi-entities, but they are relatively passive in terms of the transaction volumes that they generate. So we're really, really excited to have that light plan live. Already had some fantastic feedback points from people who had looked at Mayday before, liked the benefits it could deliver, but couldn't kind of make it work for them with the existing price structure we have. That light plan is now a great way of catering to their needs. So that is our new pricing, which is live in product as of today. So that is everything that we were planning to cover today. Hopefully people have found that useful. It continues to be such a thrill for us to serve your month end and specifically right now your multi-entity month end needs. So yeah, we're just we have the most kind of I like to say, we have the most amazing kind of problems to have in terms of choosing which features to prioritize. It's such a great challenge for Griffin and I, because there's so much that we are excited to deliver you to help mend month end. Thank you very much for joining us. If there are any other questions, please do pop them through in the comments on LinkedIn. We've got a couple that have come through here. So first off, what's the timeline for multiple loan accounts in Balancer? Griff, I'm gonna fire that one at you.
Sure thing, yeah. So this, we're working on this as we speak. There's a fair number of complications involved in it. So hopefully within a couple of weeks, that should be live in the product. So you can look out for an announcement email coming out about that, hopefully in the next week or two.
Amazing. And then we've got another question here about what happens if I hit the limit for the light pricing plan or want to upgrade in full. Yeah, so we've done, the team have done an amazing job on this. So this is now really, really nice and simple. If you want to switch between light and full plan, you can do that within the billing section, within settings in the product. And similarly, if you want to switch from a monthly plan to an annual plan at any point, because you get a kind of works out at a up to 20% discount there, broadly speaking, 12 months to the price of 10. So what we can kind of commonly see there is people might start with a monthly plan off the back of their 30-day free trial, and then after a couple of months realize that, okay, Mayday is now embedded within my finance tech stack, and so that 12 months to the price of 10 is really compelling. So both the switch between the light plan and the annual plan, and the full plan as and when you need it, but also that switch between the monthly plan and the annual plan, all available for you self-service within the billing section in settings. All right, amazing. Well, I think that's all we've got time for this morning. So thank you for joining us for this this brief check-in, this pit stop, for us to update you on our progress, and really excited to reconnect in 3 months' time when we'll have another quarter's worth of progress to reflect back on and another quarter to look forward to. Thank you very much.
Thanks, everyone.